rates seem to be stabilizing. Will that really make a difference in the funding issue?
Definitely, it will. Because, again, if you look at the various actors, especially in Nigeria, production costs have risen a bit. It's not that easy, really, to produce. I think for Nigeria, we're looking at technical costs somewhere in the range of about $27, $28 per barrel. And then if you add in all the other various ancillary costs with security, with communities, here and there, payments here and there, you're probably looking at cost structures per barrel for most of the maybe smaller players, indigenous players, in the region of in the 30s. And what that means, therefore, is that the higher the oil price, the more leeway it gives them in terms of profitability from each barrel. It also gives the government more revenue as well, too, because the government also sells its own share of crude oil from the JVs. So it has the increase in price is good for us every time we get it.
Now, in all of these, what role do you expect the government to play?
I think the key one is going to be how the government itself looks to fund or essentially make the environment more flexible for operators in the industry. And I'm speaking largely of government's relationship with the IOC, because I think that's always going to be very key in terms of funding new development. Those guys play a key role. They're still sitting on a lot of the OMLs and OPLs. So it's clear that government needs to find ways to support that. And I think PIB is also going to play a very big part of that. So we're cautiously watching for the passage of the PIB, because it should unlock more investments if all the right terms are put in place.
And why do you think we have this very long delay in passage of this PIB bill?
Well, honestly, to be sincere, I think a lot goes into trying to harmonize all the laws. I mean, we were trying to harmonize about 22 plus oil and gas regulations into one single document. So it was going to be quite difficult. But I think the new approach, which is to split it and then pass it in bits, is quite good. And that's likely going to help us to see it pass, hopefully before the end of this year. And but major things delaying it were that there were issues, areas of contention, a lot of interest also too that needed to be really addressed before it could be passed.
All right, you did recommend a new financing structure. What sort of structure are you looking at?
Clearly, I think equity is very key for the oil and gas industry, and I think a lot of local operators need to look more into that space. They need to raise equity because there's so much dependence on debt from the banks, debt from financial institutions, and I think that is really restricting the ability to explore opportunities in the OPLs with a lot of other blocks where equity would only be the only thing that could give them the flexibility to actually take those risks. With debt, I mean, there's limits to what you can do. You can only develop a producing field or a near-term field, but with equity, you could do a lot more. You could do some wildcatting, you could take some real exploration risk, and unlock some new discoveries. So I think that financing structures need to be looked at somewhere more towards the equity space.
Now, aside from equities, what sort of financiers do you have in mind?
Well, you've got to talk to a lot of private equity. You've got to talk to, you still need to talk to your banks, clearly. Your banks are still going to be a very cardinal aspect of structuring all that, putting all that structure in place for you.
Now, there are the indigenous segment of the upstream oil field servicing industry. We have the marine services industry, drilling chemicals and parts industry, procurement and construction segments. How will the increased drilling activities impact these industries?
Definitely going to be very positive for them. I believe we have started to see some of that because as the drilling companies operate, they need all their drilling chemicals, they need to procure parts, they need to, and as the companies also develop their fields, we're seeing, we've been getting all sorts of information. Companies are looking at early production facilities, companies are looking at ways to quickly access and optimize fields. So there will be demand for a lot of engineering services as well too. So again, I think it's all positive on that front. As long as we're seeing this development in drilling, it should bring about some positive development for the other segments of the oil field servicing industry.
Now, let me ask you, recently the Lagos State launched Lagos State-owned oil company. They called it
Exactly.
Ibile Oil and Gas Corporation. What's your take on that?
Well, I think it's innovative for Lagos State to launch its own its oil company, really. The question is going to be, what exactly is their objective? I mean, we've seen several other states launch similar and acquire blocks, but no development has really happened. So for me, it's an opportunity for Lagos State to really tap into the potential for oil and gas that the state has. If the proper funding structure is put in place, Lagos State can actually lead the way in terms of, developing and monetizing its resources. Because, I mean, imagine a potential with all the gas opportunities that you have offshore Lagos. If Lagos State is able to develop a lot of those gas resources and then harness them locally with power, through the power sector, harness them locally through, all the refineries that are coming up in Lagos, there's a significant opportunity here. And I think Lagos is just looking to tap into that.
And what is your short to medium-term outlook in terms of oil production in Nigeria?
Well, I think where Forcados is back, Forcados will be loading 2 cargoes this month, and that's a good sign. So roughly production should be back to 2.2 million barrels per day by the end of this month. And that's a good one for Nigeria. I think over the long term, as long as we maintain peace in the Niger Delta, we pay the amnesty bill, we pay the amnesty, make the amnesty payments, we should be able to maintain production above 2 million barrels per day. And with oil prices, if oil prices continue to, unfortunately, I don't think OPEC's efforts in the oil market are going to yield much return. So I think we're likely to see oil prices track between 46 and $55 within the medium term. That's the range we're going to be in. And that's not too bad for us with all our benchmark at $44.5 per barrel.
All right. Thank you very much for your time, Dolapo. Dolapo Oni is the head energy research at Ecobank Group. We'll take a quick break. When we return, we'll look at the latest on the Nigerian economy. Just stay with us.